It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A House divided. Chair Powell marshals a consensus for 25 basis points of a cut over reticence from voters and non-voters, potentially foreshadowing a difficult 2026 for monetary policy. Oracle's naughty quarter. A Santa Claus rally in the air after Oracle ruins the cross-asset party. And captured. U.S. forces seized a sanctioned oil tanker off the coast of Venezuela. Venezuela calling the action blatant theft and an act of piracy. So let's look at these futures. They are pointed lower, in fact, quite strongly lower. This, though, must take into account the fact that Oracle very much disappointed after the bell, and it's down more than 11% in pre-market trading. After the 25 basis point decision, as markets were digesting it, we did see a rally, and the S&P 500 closed up 0.7%. We're close to records everywhere, really, including the Russell 2000. Small caps really got a nice boost from that 25 basis point cut. But there is a lot to parse in the statement and in the differing views. Next year, the median dot is for just one cut. Meanwhile, Chair Powell did highlight some difficulties in the labour market. So let's look at the bond universe, because we did see some bull steepening. The shorter end coming down. We're at 353 now. The longer end pretty much staying where it was, 478.88. We have a lot to get through. We're going to be speaking with Marvin of State Street in just a few minutes. But first, let's get to those individual equity movers, because clearly they are having an impact on this market and what may now not be a Santa Claus rally. We'll see. Let's get over to London and Valerie Teitel.
Good morning, Bonnie. Let's start with a check on Oracle after earnings that are igniting more worries about how much money they are spending. Oracle shares down 11.4% after their results showed a near 40% rise in CapEx spending alongside a cash burn of $10 billion in the previous quarter, getting investors anxious on whether Oracle is going to receive this return on investment quick enough in order to fund that $100 billion worth of debt that is now in Oracle's name. Sticking with the tech sector, let's check on the wider names in the neo-cloud industry, because we are on a back foot when it comes to CoreWeave and Nebius. CoreWeave down over 3%, Nebius down nearly 2%, and NVIDIA, really the giant of this AI trade, also suffering some losses, down 1.8% so far in pre-market. Lastly, let's check on a Chinese e-commerce giant that runs Temu, that is PDD, the owner of Temu. Shares are in the red, down 1.6%. Some interesting reporting that a fist fight broke out in between Chinese regulators and some employees last week, and this is igniting some worries of more regulatory scrutiny on the highly competitive e-commerce space in China. Bonnie?
Wow, fist fights in the regulatory sphere. Who would have thunk it? Valerie, thank you so much. Valerie Teitel there. Coming up this hour, we look at the post-Fed market setup with Marvin of State Street. So let's stay with the Fed now, and Chair Powell balancing the Fed's dual mandate.
Available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. But with downside risks to employment having risen in recent months, the balance of risks has shifted. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through.
Stocks did rise on the decision, with the S&P 500 posting its biggest gain on a Fed decision day since March. Bloomberg's Ven Ram joins us now for more. So a lot of what the Fed chair said there, Ven, he said before. He talked about balance of risks. He talked about maybe just protecting the labour market ever so slightly, effectively an insurance cut in some ways. So if the economy is doing fine, then why isn't risk sentiment doing fine?
Well, I think risk sentiment may not be doing fine because of what happened with our Oracle. And there's quite a bit of froth in the markets, and that has got to come off. And the markets will be increasingly volatile at these higher levels. Now, going back to the Fed, Bonnie, I think that, what was a surprise was, why is the Fed still thinking that they need to cut rates at least once in 2026? Because if you look at the median dot plot, they are saying that they're saying that they're forecasting growth to be 2.3%. That is way higher than what they were projecting in September. So the Fed kind of believes in this narrative that AI is going to boost productivity growth, which is not unreasonable. So if you're expecting growth of 2.3%, and inflation to be sticky, and we know that core PCE has averaged 2.8% this year, where really is the room to cut rates? So it was a bit of a dovish read, which is why I think that the markets will cotton on to that. There will be short-term profit-taking in the markets because, as I said, there's plenty of money left on the table. There will be increasingly the temptation to take some of it away. But I think that the secular move in the markets is one in stocks is going to be higher for longer.
Yeah, I mean, this could be one of the last exit points, as one of our MLive posts points out today before the year end for stock investors. But Ven, I do want to ask you, do we definitively have a dovish Fed now? It is only one cut priced in median forecast-wise for next year, and there are some on the Fed that think that should be more, as many as 3, for example.
I think the 3 is going to be a bit too contrived. You've got core PCE running at 2.8%. And with real growth of 2.3%, that puts the nominal rate, Fed funds rate, somewhere around 450, in the vicinity of 450 to 5, which is where we are now, 450 on the lower end of the Fed's rate. So there is no real room to cut rates. But if the next Fed chair is going to be dovish, and we know that is written into his job description. So I think if the Fed is going to be dovish, I think the markets will punish the Fed by pushing the long end rates much higher. And if you look at the 2-year yield, Vonnie, it hasn't gone below 4.5%, even though the Fed has been cutting rates. So I think that, the markets are sending out a message to the Fed that, look, you can have your Fed rate where you want, but ultimately it's for the markets to dispose what the real case is.
Yeah, Van, thank you so much. That is Bloomberg's Van Ram there. Well, as Van mentioned, shares of Oracle continuing to drop in the pre-market after reporting a rise in AI spending and disappointing cloud sales. They fell short of analyst estimates. Joining us now is Matt Bloxham of Bloomberg Intelligence. So obviously $15 billion more than it had forecast going to be spent on CapEx related to AI. As Sebastian Boyd put it, traders are just losing faith in the future cash flows of AI investment. Does that remain the case? Is there anything that can be done to sort of change investors' minds?
Yeah, I think certainly that definitely spooked investors yesterday. A 40% plus increase in capital spending, which the company says is directly linked to demand, to revenue generating demand from customers. But as we saw a slight miss in the revenue number. So to the extent that revenue is coming through, it's coming through quite slowly. And I think it's just like another conundrum that investors need to kind of figure out as they try to make sense of a quite rapidly evolving and complex business model for all the different players in the AI value chain. I think the company tried yesterday on the earnings call to ease concerns about the drain on cash flow. It was a cash outflow of $10 billion in the quarter, which when you've got $100 billion plus of debt, it doesn't sit so well. And they talked about a number of different business models and ways they can kind of bring demand into the data centers without having to pay for all that capacity up front. I think that's just added even more complexity to the jigsaw investors trying to put together. And I think people would rather see just a kind of fairly straightforward, simple, here is our business model, this is how it works, which would allow it much easier to make sense. And that's not where we're at right now.
But Matt, the company did say that it'll have to raise less cash than expected. I thought that's what traders and investors were worried about, the cash raising portion of this whole investment. But if it has to raise less, then what's the problem?
I think it's because they talked about this issue that for the kind of fiscal 27 or essentially calendar 2026 that analysts are penciling around $100 billion of incremental spend and maybe beyond that just kind of build out this kind of capacity play. And they said it's likely to be somewhat lower than that. I think the issue is the print was that in the very near term, CapEx is going to be sharply higher than expected. And I think that's kind of where investor attention is more focused.
All right, Matt Bloxham, thank you so much for the context this morning. That's Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Mexico has approved new tariffs on Asian imports, broadly aligning with US efforts to tighten trade barriers against China. The bill imposes tariffs of between 5% and 50% on more than 1,400 products from Asian nations that don't have a trade deal with Mexico. They'll take effect next year. China's Ministry of Commerce criticizing the tariffs, calling them a mistake. Venezuelan opposition leader Maria Corina Machado finally appeared in Oslo in the early hours of Thursday morning. This hours after her daughter had accepted her Nobel Peace Prize on her behalf. The Nobel Institute said that Machado underwent, quote, a journey in a situation of extreme danger to reach the Norwegian capital from a place of hiding in Venezuela. JP Morgan is set to open a new branch in India after nearly a decade in a city near Mumbai. The bank has received in-principle approval from the Reserve Bank of India to establish its fourth branch. Foreign banks have been expanding in India, lured by its rapid economic expansion, strong credit demand, and deepening corporate activity. Coming up, escalating tensions. The US seizes a sanctioned oil tanker off the coast of Venezuela. More on that next. This is Bloomberg.
We've just seized a tanker on the coast of Venezuela, a large tanker, very large. Largest one ever seized, actually. And other things are happening, so you'll be seeing that later, and you'll be talking about that later with some other people.
The seizure escalating tensions then between the US and Venezuela. Joining us now is Bloomberg's Will Kennedy. Will, this isn't a game of battleship. I mean, these are sovereign assets that the US is taking out. Even if these are narco-trafficking vessels, does the US have the right to do this?
That's an interesting question. What we can say about the tanker that they seized yesterday is that it has been sanctioned by the United States, so they clearly see it as a problem. It's been sanctioned as part of the shadow fleet that enables the trade in oil from Venezuela and Iran. And has been involved in those trades for some time, according to the US. Its ownership is very opaque. It's registered in Guyana. It's owned by Nigerian nameplate companies. But the US sees it as part of this shadow fleet. So it feels like it has the right to do this, and this is a legitimate way for it to put pressure on the Venezuelan regime. Whether international lawyers would say it the same way is an interesting question.
Yeah, and I love how, it's meant to be about drugs, but it ends up about oil. Chevron CEO Mike Wirth spoke to Bloomberg before the announcement about the company's presence in the country. Let's just have a listen.
I don't know what the president's intentions are. We've been in Venezuela for the last 100 years. Our presence there, we believe, is important for the local economy, the regional economy, the people of Venezuela. The Venezuelan oil is sought after by U.S. refiners, and we operate there in full compliance with all U.S. law and sanctions. We're in discussions with the administration to ensure that we stay in compliance.
I mean, what does this escalation mean for big U.S. oil companies? The president said yesterday he guesses we're going to keep the 2 million barrels that were on that ship.
Yeah, it's a really interesting question. In the short term, obviously, this tension could disrupt oil trades, but especially if, as you say, the US acts in similar ways again. But Venezuela is a relatively small supplier to the global market these days. Its exports are a fraction of what they used to be 20 years ago, at less than 1 million barrels a day or so, less than 1% of global supply. So it will be pretty marginal in the near term. I think the bigger picture was alluded to in your conversation with Mike Wirth there, which is if there is some kind of change in Venezuela, if there is a regime or an accommodation which is more aligned with US interests, the US clearly would see that as an opportunity to increase exports from Venezuela, lift sanctions, allow more investment, perhaps allow more US oil companies to operate. And so in the medium to longer term, this crisis may bring us to a place which is actually relatively bearish for the oil market. So there's a real nuance between the short and the medium term there, Vonnie, I think.
Yeah, that is fascinating. Will, thank you so much, bringing amazing context there to the story. Bloomberg's Will Kennedy. Coming up, House lawmakers moving to pressure Defense Secretary Pete Hegseth to release the evidence for that boat strike. More on that and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. American Airlines expecting a strong first quarter of 2026 with resilient travel demand. Bloomberg's Lisa Abramowitz spoke exclusively with United CEO Robert Isom.
You'll see us open up more secondary cities in Europe. You'll just see us do more flying into the hubs of some of our partner carriers. And international will probably outgrow what we do from a domestic perspective, but the two are connected. And, I'm really pleased with our domestic operation. We're going to always have the best domestic network. And, you go back, a number of years and domestic, outperformed international. And we're going to be ready for domestic doing well and international doing well, premium doing well, and really pleased with where we're at.
You've been working on upgrading the entire fleet, and that's something that's been really important for you, especially as you get some of these premium offerings in place. How much have some of the slowdowns, supply chain issues at Boeing and Airbus hampered that ability to really retrofit some of the fleet?
Well, where we stand today, we have the youngest fleet in the industry. We made a tremendous investment from about 2014 to about 2020. And we brought on well over $30 billion of new aircraft. So we have the youngest fleet in the business right now. But on top of new deliveries that we're taking, we don't have any retirements planned. So we're reconfiguring our 777-300s and our 777-200s. We're putting flagship suites on those. Even domestically, we're doing work on our 320s and 319s. But we still depend on new deliveries. And from that perspective, we have a lot of dependence on Airbus to deliver the 321 XLRs, Boeing to continue to deliver the MAX 8s, and hopefully be ready to deliver the MAX 10s that we have on order in 2028. Right now, my only push to the OEMs is deliver on time, deliver a quality product, stick to it. Before you ramp up, let's make sure we can do what you're on the books to deliver now.
Just taking a step back, in the airline industry more broadly, there's been this huge focus on the supreme product, the luxury product. And I wonder what you see in terms of bookings next year, whether it really is the premium product that's continuing to lead and the robustness that you see there while other things fall off. Is it bifurcated in terms of the bookings and the demand, or do you see a wholesale sort of rejuvenation in the interest in travel and ability to spend and pay the prices that actually are there?
Well, I'll just start with this. Demand has been resilient, right? Every time there's cold water poured on the environment, it seems like travelers want to come back, as evidenced by bookings for the holiday season, and as we take a look into the first quarter of next year. I have confidence, though, that overall people want to travel. And in people wanting to travel, I also think that, whether you're more economy focused and budget minded or you're premium services, everybody wants more. Everybody wants better control. Everybody wants more comfort. So I don't think that there is going to be any going back in terms of offering product at any level of the spectrum of offerings. But for us, as we go forward, you'll see us with our lie flat seat offering. That's going to grow by 50% over the next few years. Premium seating, 20% over the next few years. Whether you're a business traveler who've always wanted, more of that, comfort and ease of touch, or you're a leisure traveler, there's much more of a demand to really have a better experience.
American Airlines CEO Robert Isom there with Bloomberg's Lisa Abramowitz. Time now for your front page news. First up, on the Wall Street Journal, a U.S. blueprint to rewrite the economies of Russia and Ukraine is setting off a clash with Europe. The plan outlines Ukraine's reconstruction and Russia's return to the global economy. The proposals include U.S. financial firms tapping frozen Russian assets for projects in Ukraine and U.S. companies investing in strategic sectors in Russia. One European official told the Journal it was, quote, like an economic version of Yalta, the conference where the victors of World War II divided up Europe. Next up, the New York Times is reporting the House has given bipartisan approval to a $900 billion defense bill. The bill would codify much of President Trump's national security agenda, but seeks to curb his move to withdraw from Europe and mandate more Pentagon consultation with Congress. It goes to the Senate next, which is expected to approve it overwhelmingly. And finally, on the Washington Post front page, the House passing that defense bill once again. Included in the bill, says the Post, pressure on Defense Secretary Pete Hegseth to release evidence of that military boat strike that killed 2 survivors of an initial strike on their alleged drug smuggling vessel. The legislation would withhold 25% of Hegseth's travel budget until he discloses all his orders authorizing military attacks and releasing unedited video of those operations. The legislation compels the Defense Department to consult with lawmakers before withdrawing US troops from Europe or South Korea and before restructuring America's vast military commands around the world. All right, let's take a look at these markets. Post-Fed day was the day we were all waiting for. Now I guess the markets are going to look ahead to next week and the economic data, the huge raft of economic data that we're going to get. So futures are pointing lower, primarily because Oracle is dragging everything down. That result after the bell caused that stock to drop 11% post-market and pre-market. We do have the dollar index unchanged and the 10-year yield pretty unchanged, but we have front-end yields coming down just a little bit and some bull steepening going on. So AI jitters dragging equities down, but we'll also speak with the Fed with Marvin of State Street next. It's 5:30 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A House divided. Chair Powell marshals a consensus for 25 basis points of a cut over reticence from voters and non-voters, potentially foreshadowing a difficult 2026 for monetary policy. Oracle's naughty quarter, the company's earnings rekindling valuation concerns and fueling uncertainty over a Santa Claus rally. And captured. U.S. forces seize a sanctioned oil tanker off the coast of Venezuela. Venezuela calling the action blatant theft and an act of piracy. Let's take a look at those markets then. It is a very red picture, with the exception maybe of Russell 2000 futures. We definitely saw small caps rally to a record yesterday after that Fed decision, which was expected, but nevertheless it came. S&P futures and Nasdaq futures potentially being coloured by the Oracle earnings. Oracle itself down more than 11% pre-market. Because they did rally into the close yesterday. The S&P was up 0.7%. The Nasdaq 100 was up a full 1%. So we are still very, very close to those records. It all really depends on the AI trade. And of course, that data next week, we get a plethora of it. Let's get to some individual movers now. Pre-market here in the United States. We'll go to London and Valerie Teitel.
Good morning, Vonnie. Let's start with a check on Oracle. It's making waves across global markets this morning, down near 11% in pre-market trade after the results after the bell showed them marking up CapEx spending for the next year by 40%, alongside a cash burn of near $10 billion for the previous quarter, igniting some worries about when will the revenues come to hit for generative AI. Remember, Oracle is highly leveraged to OpenAI, and it's really using that one client to fund this big push into the cloud space. Let's check on some of the other neo-cloud players on the back of these disappointing earnings from Oracle. We're seeing the likes of CoreWeave in the red, down 3%. Nebius also down 1.5%. These are the two main players, at least in the neo-cloud space, that Oracle competes with. NVIDIA as well on a back foot, down 1.75%, 1.8% as we speak. Next, let's turn to Temu. This is the Chinese e-commerce giant run by this company called PDD Holdings. The shares are down 2%, Vonnie. There's been some reporting that Chinese regulators got into fistfights with employees last week. Those regulators were investigating some reports of fraudulent deliveries. Now, this is just increasing investors' concern over a wider regulatory crackdown on the highly competitive e-commerce space in China, with PDD Holdings, that's the owner of Temu, down 2%.
That is literally an incredible story, Valerie. Thank you so much, Valerie Teitel there. State Street's Marvin Lowe parsing through the Fed's policy statement, writing, quote, "The current level of disagreement over the current year forecast is both unusual and unprecedented. The policy statement was changed to include the term extent and timing of additional cuts, replicating language they used last December before hitting the pause button for most of 2025. Very pleased to say now that Marvin joins us now. He's Senior Global Macro Strategist at State Street. So, Marvin, this reverting to this language, I mean, are you saying that you think that means we won't get a cut, at least in the early part of next year?
You know what? I think we've seen the last cut from Chair Powell before he's required to give up a seat. I do think that at this point, there's enough questions on how to interpret the economy that the Fed is in a position to just really wait to see how that data evolves once it starts making its way through the data banks again.
He's obviously clearly still concerned about the labour market.
Yes.
We obviously haven't got the freshest data yet, but I mean, the cuts that we have seen, have they propped up the labour market to the extent that it is?
You know what? I've been in the camp that there are structural changes in the labour market, so it's hard to interpret. You know, certainly there has been weakness in the labor market, but is it weak to the point where it's signaling a recession the way it normally would with employment coming in at these levels? I'm not necessarily sure. And when we kind of look at how spending continues to remain fairly strong, there's signs that there's strength in the economy, despite the fact that that data is a little bit shaky.
So how come there's so much disagreement? I mean, that's the one thing that everyone seemed to agree on, that the economy is pretty resilient.
Yeah, exactly. Well, it's exactly that. If the economy is resilient and inflation is still above target, which it is, the Fed needs to send a message that it is very serious about that aspect of its dual mandate, and it should just be waiting for the economy to tell it to do something.
Now, we did get some bull steepening. It started a little bit before yesterday. Does that continue? Do front ends come down? Do they dip below 350 at any point?
You know what? I do think that the front end is well supported in here. We were potentially looking at a Fed that might have been more aggressive in saying that, you know what, we might not need to cut. We might not need to cut anymore. I think that you saw aspects of that, but still there's enough folks on the committee that think that they should cut. And if the data continues to, if you will, be somewhat mixed, you're going to have a supportive front end.
Now, we get 3 Fed speakers today. At 8 o'clock, we get Anna Paulson, 8:30, Beth Hammack, and 10:35, Austin Goolsbee, who dissented. Yeah, will he give us a little more reasoning into his thinking?
Yeah, for sure. And Hammack is a voter next year, so it's part of the traditional rotation. We view her, a lot in the market view her as being somewhat more hawkish also. So I think we're going to hear a lot of the thought that went between the actual dissents in the policy statement, as well as maybe some of the quieter protests that people are saying that came out within the dots.
Exactly. Now, we spoke to Ellen Mead yesterday. She said we're at a pivot point here with dissents. In other words, we're going into a period where it's not going to be that unusual to have several dissents. Yeah. It's never really been the case before that you have more than one or a couple of dissents. I mean, this time around it was pretty hectic in there.
Yeah. It's fun to watch as an analyst, I'll be honest with you. I think it really does speak to the fact that the economy is moving very far away from what had been this 10 to 15 years of post-GFC financial repression. And if you come from the view that, yes, the economy is really changing itself structurally, we're going to get more dissents, but also the path of rates, which the market wants to embrace as quite clear, in my mind, is not necessarily as clear. You know, the market is definitely grabbing on the fact that cuts are still in the curve, that they will step up to the plate to cut, but it could be some wild times before we really understand.
Why is the median dot for one cut when we know that the next Fed chair is going to be even more dovish than what's become a dovish Fed?
Yeah, well, it speaks to the division within the Fed. You know, kind of how we got to that one dot is wider now than it was in September. There are certainly some aggressive views from Stephen Miron in particular. Others joined him in thinking that there were cuts, but then we've got a cadre of folks that think that we shouldn't do anything, and some folks that think that we should actually hike. So that gives you a pretty wide spectrum, and we really haven't needed to deal with that at the FOMC level, you know, for quite some time.
What are you looking for next week? And to that point, what would we have to see in order for the market to undergo another repricing before the end of the year? Yeah,
you know what? I guess if the job market starts to show stability, the way some of jobs data has been mixed for sure. JOLTS data this week showed that, you know, there are signs of stability. If we do get continued signs of stability, views that the jobs market can function at this level because we've got structural changes in it, and then we get the pricing data. If the pricing data starts to show tariffs in a way that we expected earlier this year, and we continue to see potential wage pressure within that, it does put the Fed in a bit of a conundrum, and you have more footing for the hawks to say that we should be pretty patient.
Could it possibly be the case that the tariff pass-through is happening right now, has happened, that we're seeing it in whatever data we're getting, or are we still in for a shock on that?
You know what? It certainly is possible. It's been a very, very long journey. We expected to see prices higher probably 3 to 4 months ago. Some of the data that we collect within our online scraping tools shows that the pricing pressure is still making its way onto the shelves. And we should continue to expect some upward pressure going into the first quarter of next year.
Yeah, I mean, in that scenario, you would think inflation would rise again, and will it pass through to services too?
Yeah, exactly, and that's where you need to be cautious about the two-way risk that Powell really winds up talking about.
I have to ask you about the liquidity pressure, the $40 billion worth of bond buying. Anything that we should be concerned about there?
You know what? I think that, to me, it signals that the Fed is willing to step in when funding is a concern. There had been discussions that they would let kind of some of the volatility continue because it shows a functioning money market aspect. Kind of having said that, they stepped in earlier. I didn't expect them to be as aggressive at this point in the cycle. It does take away one of the risks that I think the market was concerned about going into the beginning of next year.
Just have to ask you a very brief question on Oracle. I mean, how much of an existential threat to this market rally is this trade as opposed to the Fed trade?
You know what? I don't think it's an existential threat. Oracle certainly, from a macro perspective, was one of the more concerning names, if you will, just because of the way their bonds were trading. They were definitely lower in the kind of the credit profile. But it does speak to just how powerful that AI trade is in overall valuation. So if we hear more stories like this, that volatility will continue.
All right, Marvin, it's always a pleasure to speak with you, particularly in studio. Thank you for making the trip. That is Marvin Lowe at State Street. Now to other top stories trending on the terminal this morning. Mexico has approved new tariffs on Asian imports, broadly aligning with U.S. efforts to tighten trade barriers against China. The bill imposes tariffs of between 5% and 50% on more than 1,400 products from Asian nations that don't have a trade deal with Mexico. They'll take effect next year. China's Ministry of Commerce criticizing the tariffs, calling them a mistake. Casualties are mounting from renewed border clashes between Thailand and Cambodia as U.S. President Donald Trump says a phone call he plans to make should quell the situation. The two countries have been exchanging fire along the disputed frontier since Sunday. The flare-up marks the most serious fighting since July and puts pressure on Trump's peace deal. Volkswagen is considering offering EVs with range extender technology in Europe and the US. These range extenders could be added to its sports utility vehicles and sedans. The technology is popular in China, but not yet widely available in Western markets. Coming up, US-Venezuela tensions escalating. More on that seized oil tanker off the coast of Venezuela next. This is Bloomberg.
We've just seized a tanker on the coast of Venezuela, a large tanker, very large. Largest one ever seized, actually. And other things are happening, so you'll be seeing that later, and you'll be talking about that later with some other people.
Tensions rising between the two nations. Venezuela, in a statement, labeling the seizure a blatant theft and an act of piracy. Mika Solner of Bloomberg Government joins us now from Washington. So, Mika, how is this playing in Washington, D.C.? Is there any appetite for this kind of behavior to continue?
Yeah, absolutely. I mean, this is a huge escalation of the Venezuela and U.S. tensions. And I was actually in the room yesterday when President Trump announced that the U.S. had seized an oil tanker, which is a move that a lot of lawmakers and on Capitol Hill are surprised by and have questions about. But I will say the White House has been very skittish and quiet about the process. They're arguing that everything that they're doing is legal and have said that they've been transparent when it comes to providing that information to concerned Republicans. But we're going to see a lot more questions raised in terms of what exactly the administration's plan is in South America.
Right. Well, particularly because the House has now passed the $900 billion defense policy authorization bill. The Senate's very likely to pass it. And doesn't it include provisions or really mandates for the Pentagon to consult Congress more?
Yeah, exactly. There's been a big question here in terms of what is the White House actually communicating with the Hill. There's top Republicans that have been publicly critical of how the president has handled the strategy, but also just in terms of how much Congress should be allowed. I think there's a question of whether there should be congressional authority, depending on how much the administration wants to get involved in the region. And we're going to continue to see those questions and concerns raised.
I do want to ask you about the Warner Brothers merger. I mean, it's become the top corporate story to the end of the year, right? It sparked political debate now and along political lines, with the president also weighing in once again on what the deal should look like. Let's just have a listen to what he said.
I think any deal should be guaranteed and certain that CNN is part of it, or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue.
I mean, it's such a head scratcher in many ways, because I thought he hated and had absolutely no respect for CNN, but suddenly he has the opinion that it needs to go to the buyer. Can you explain, Mika?
Yeah, well, it's also interesting because at the same time, I think moments before or after those comments, the president also said he's not involved in this deal. But clearly, there's an interest in terms of the relationship with the White House that, this merger is going to have. I do think it raises the question of, what direction the large media, cable news in general, is going when it comes to, Trump wants to see CNN sold, better leadership there, or in his view, the same thing happened with the break between NBC News and now MS Now, as well as CBS News, trying to take news in a different direction under this administration.
Absolutely. Well, I mean, we have to wait and see, but do we anticipate that the president will have any kind of sway really in what happens? I mean, it's the board of directors ultimately that decides on the winning bid, right? And it should be what benefits them, economically, financially, I suppose, as well as, philosophically, although that probably takes last place.
Yeah, I think that the president is a businessman at heart, so I think that he clearly has extreme interest in this and what's going on. But, in terms of whatever involvement that they're going to have, I think that that's been pretty under wraps. But it's also clear that, that is definitely a factor in what's going on here.
All right, Mika, we will follow this story. Mika Solner of Bloomberg Government in Washington there. Shares of Oracle extending their double-digit losses. The company announcing a rise in AI spending, disappointing cloud sales as well. Those fell short of analyst estimates. Joining us now is Matt Bloxham of Bloomberg Intelligence. Does Oracle deserve this ding, Matt? Should it not be upping its spending?
Well, I think that that's a kind of mixed debate on that, and I think what we're seeing yesterday, the scale of the capex surprise, so more than 40% increase, $15 billion more spending this year, taking it to $50 billion, and it's the balance of that against the time it's taking for the revenue associated with that investment to come through. We saw a slight miss on the top line in yesterday's numbers, about 1%, no change to the full year revenue guidance. And they're talking about a kind of multi-billion-dollar increase to their 2027 expectations to reflect that demand. But I think that kind of time lag between the spending and the revenue coming through is what's unsettling investors.
It's not seeming to unsettle analysts on Wall Street, though. I mean, unless we start getting a whole rake of revisions to price targets, because their price targets are so much higher than where Oracle is trading at right now. Who's more right, the market or the analysts?
Well, I guess the market's always right at a certain point in time, isn't it? Clearly, the analysts are kind of bought into this kind of mid to long-term view that AI is going to be a transformational technology covering all aspects of society and business, and that Oracle is incredibly well placed to benefit from that because it's got this massive partnership with OpenAI, $500 billion of forward revenue committed, a lot of which is from OpenAI. So if the AI story plays out successfully, OpenAI benefits, Oracle benefits, and I think that's what you're seeing in those target prices. But clearly, the near term, there's a lot more uncertainty about the business model, not just for Oracle, but for all these AI names. And the cash flow drain has really kind of gone beyond what the market's comfortable with right now.
I mean, it's leaning really heavily on these high-profile partnerships. How exposed, in fact, is it to these partners' shift in strategy?
Yeah, very exposed. But I think they did talk yesterday about trying to kind of manage that risk. That they position themselves as a neutral platform in terms of the large language model providers they work with. If you're a customer, you can get access to a whole range of different models, not just OpenAI. And similarly, on the kind of technology side, they've had a long and successful partnership with NVIDIA. But again, they're kind of pitching themselves as a kind of chip neutral company, and they're not just building partnerships with NVIDIA, they're building partnerships with AMD and Google, so that they've got a full diversity of technology available to their customers.
All right, Matt Bloxham, fantastic as always. That's Matt Bloxham of Bloomberg Intelligence. I do want to bring you these headlines. The EU is weighing a conditional 5-year delay to its ban on combustion engines. So it looks like that ban on combustion engines might now have to wait for another 5 years. Shares of several car makers, including Volkswagen, are up on the news. It does seem to be the direction of travel now that countries are delaying their bans or they're cutting back on the use of internal combustion engines. Once again, that would be a 5-year reprieve. Now, the EU does still say it aims for zero emissions in new passenger cars by 2035. Coming up, Fed Speak returns, plus earnings in your day ahead. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. U.S. initial jobless claims, will they come out at 8:30 Eastern? Plus, we get Fed Speak throughout the day. We're going to hear from Paulson, Hammock and Goolsbee. And then more earnings. Broadcom and Costco both reporting after the market close. So let's take a look at some of yesterday's movers and what's moving pre-market. Oracle for sure is moving. It is down now more than 11%. Disappointing cloud sales and more AI spending than was anticipated, and that totally dragged that stock down, but also the AI universe in general lower today. Netflix up about 1.5%. It's the sole gainer among big tech amid this battle to acquire Warner Brothers. And then Gemini Space Station, ticker Gemmy, up more than 16% pre-market. This is, of course, the Winklevoss twins company. Well, it's gaining after receiving a license from the CFTC that would allow it to begin offering prediction markets to the United States. So that's the new in thing. We moved from Bitcoin to treasury companies, and now it's prediction markets. Let's take a look at the macro environment as we head into the post-FOMC day. Certainly lower on futures. We did, though, rise 0.7% on the S&P 500 yesterday, but Oracle dragging that complex down. The dollar pretty much unchanged. Gold unchanged, but it is above $4,200. But let's take a look at bonds, because that's where it's at. That's what we were looking towards for any kind of an indication on how this market is taking the Fed decision. And, of course, the summary of economic projections, which includes just really a median dot for one cut next year. 2-year yield at 3.53, so up a tiny bit from where it was, but some bull steepening definitely going on here with the 30-year yield just under 4.80 and the 10-year there sticking at 4.14.29. Not huge movement. That might come next week when we get the raft of fresh data. Well, that is for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.